The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good day, folks. Welcome to the July 30th, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. However, it's just past 8 o'clock in the morning. So if you're listening at the normal time slot, this is being recorded between 8 and 9, so no need to call in or send me an email. But if you are listening early, give us a call at 877-927-6648. If you can't do that, you can always send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on a fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, if you take a look at our screen out here, everything is trading to the downside with the exception of the U.S. dollar index, the Treasury bonds, the bonds and notes. It's, in essence, a proxy for the U.S. dollar index. Copper just ticked a bit higher, and that spot volatility was trading above its 50-day exponential moving average. To the downside, you've got Dow futures down 127, Nasdaq's off 178, a little over 1%. S&P's down 32. Russell is off 16. If we take a look at what's going on overseas in Asia, the main indices, the Shanghai, the Nikkei, the Hang Seng, the S&P Australian 200 index, each closed lower. The big leader there was the Nikkei, down about 2%, 498 points. It did take out some swing points. Looks like it wants to head lower. Took out the bottom of a TD9 count. So that's suggesting that Nikkei wants to continue to head lower. Gold's giving back a little bit of its gains out here. It's off $4. This is the December contract that we're looking at 1831.80 is what she's trading at. Silver down 20 cents, 25.75 is the print. Light sweet crude off 14 pennies, 73.48. Natural gas back 8 cents. That's a little over 2% to the downside. I think if that breaks through its center of its profile, it's going to suggest a further move lower. We'll take a look at that. U.S. dollar index, as I said, trading a bit higher, trading out 91.95. Now, I do have a 10-minute delay on this, so it may not match what you might be looking at. If we take a look at some of our core commodities out here, you've got wheat, all of them, wheat, soybeans, corn, cocoa, sugar, coffee, each trading lower. Of course, I want to look at what you want to look at, but let's begin by just a kind of a quick overview of the markets and where we're at. So, you know, this is kind of a cool actual, I use this chart here as just a quick market update to give us a feel for what's really going on. So chart-wise versus taking a look at what those things were printing at. And so here's our 9-panel, in essence, market update. We've got the ES Mini. Now, even though you don't know it, the ES Mini does have a topping signal. Rhodes Momentum Indicator top formed on July 27th. And price needs to close above that high. That is 44.16 to negate that pattern. The profile here inside the ES Mini is slightly bearish, very slightly bearish in structure. But this would suggest that price should go target 43.58. So we've got markets across the globe that are trading lower. We have the spot volatility index, which is above its 50-day exponential moving average. That's panel number 2 on that upper row. And that's always, directionally speaking, bearish for the S&P or the ES Mini. So that says 43.58, even 43.01 is game. Not necessarily today. Could be today, but not necessarily today. But the setup here is actually for the S&P 500 to move lower. The NASDAQ, it also has a Rhodes Momentum Indicator top formed on the same day, and price would need to close above its high, which is 15,131 to negate that pattern. Price right now just consolidating with inside its profiles. We both know in the ES and the NQ, the current profiles that formed have wrapped around the prior profiles. That is a signal to you and I to expect and anticipate a consolidating market. So it would not be unusual to see both the ES and the NQ move down to test the bottom of that consolidation pattern, the bottom of its profile. This is a different and unique consolidation pattern, different than the typical ones that we show you, but this one here is based upon its TAS market profiles. The Dow also has that same wrap around its prior profile, signaling to anticipate a consolidation. If you take a look at the U.S. dollar index, she right now is trading down below at the bottom of its daily profile. I don't remember the exact price. We'll try to take a look at it. Price is targeting its TD9 breakout level. That's a new term to you. Just stay tuned. You'll get used to it. And you'll find out just how valuable that pattern is. The gold contract, here I've got because we're really rolling over from August to October, I've got my synthetic version of the symbol that's up there. And that way the profiles that are here, I think, are more valid. Not that the other ones aren't valid, just simply more valid. So what gold needs to do is close above the swing point. Take that level out. And that level we're referring to is from the July 15th high. In the December contract, I believe it's 1839. On the August contract, I think it's 1835 out there. So those are the levels that price would need to take out. And if it does, we then have an A to B equals CD up pattern. Now, that A to B equals CD up should take us into about the 1875 level. I would say more like 1898 to 1920, because the retracement level on that B to C leg, should the A to B equals CD pattern form, is only about 54%. And that says that this should be able to get to more than the 1-to-1 area. Silver yesterday did close above the top of its profile, and that is, even though there's not a pattern per se, one of the patterns that I look for to identify bottoms. What silver did do, you can see this little consolidation here that was going on. This was really between the time period of about July 23rd through July 21st. Okay, so for a full month, prices traveled inside that profile level. It was consolidating there. And that really created that consolidation. And so when you break through a consolidation, as silver did back on the trading day of July 19th, what that did was that set up a measured move, and it's completed that measured move. So I'm going to say that there actually is a completed pattern to the downside in silver. And with price trading above the top of its daily profile, a second close today above that level would then suggest a change in trend for silver, in which case we would anticipate and expect gold to take out its swing point and then get onward with that A to B equals CD to the upside. In the case of light sweet crude, she formed a beautiful Gartley buy pattern. That actually formed on July 21st when it created, there was the A to B equals CD down pattern. That was a 1 to 1.618. How do we know that it completed? Well, we know because it generated that bullish reversal candle. And that was a three-river Morningstar pattern. Now prices up above the center of its profile, very likely targeting 75.25. That's the top of the daily profile. Natural gas here, I did that. So if natural gas were to close below $3.92, this does have a valid topping pattern as well. That would then signal move back to 380. Right now, prices just consolidating between 392 and 410. And a 30-year Treasury, it is trading higher this morning, but bumping its head right up into resistance. It had a tough time clearing. That's the 164 and 24/32 level. Steve Rhodes with TFNN. It's now 8:14 in the morning. If you're listening at 1 o'clock, we're trying to make this as pertinent for you as we can. We'll be right back.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500-plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
I think we're back, folks. I think they had the wrong music in there. But so it's 8:18 in the morning. We've got all U.S. equity futures trading to the downside, and we're going to be greeted by one of our Denners, John in Philly. John, thanks for calling. Thanks for holding. How are you doing this morning?
Steve, I'm doing very well. The EAA Air Venture Fly-In show is going well.
Oh,
activity,
cool.
Lots of old Air Force and new Air Force aircraft flying overhead just about every hour of the day.
Oh, that's cool. Yeah.
Yeah.
There's no doubt. That's great. So you want to talk about the S&P 500 or the ES Mini, I believe, right? So how can I help you, or what are you noticing, or anything along those lines?
I would like to ask your assistance, please, in scoping out the near future, and not necessarily just today, but next week, next month.
Yeah.
First, an observation. The S&P 500, we'll use that as a key measure of the overall U.S. equity market, declined fairly abruptly into that May 12th low, then June 18th, lastly July 19th.
Yes.
Each time an abrupt decline bottomed out quickly and then rallied back to higher highs. And each particular case, Steve, I've, using your work and assistance very closely, and have noticed your tools, things like your VIX tool, your utilization of the Tom DeMark sequential and combo system, the TD9 counts as you often describe them, the TAS profile work, and then your proprietary work with your oscillator on change line. I've observed each one of those abrupt setbacks since that May 12th low. Your work had been warning or looking at in real time the decline and coming up with the conclusion, warning, this decline is unlikely to carry through just this minute. So if you've missed the abrupt decline, my work, I'm saying that's what I've heard you say, my work is not suggesting we carry through immediately, even if we do in the future. So don't get scared out and short or sell out here. So that is just a review.
Correct.
Now,
correct.
This week we had an abrupt decline on Tuesday.
Yes.
Then, of course, last night, starting at 4 o'clock with the Amazon decline triggered by their second quarter earnings report, we've had another decline, a little abrupt decline.
Yes.
They're abrupt, to be sure, but in the scheme of things, we're talking just mere percentage points on those indices. So that's history. Looking ahead, can you share with us what you'd be looking for with price and your indicators that would, if you see what you'd need to see sometime in the near future, that would tell you, yeah, we've declined, we'll probably bounce, but this decline is different. It's warning of an important tradable high. Could you share what you might be looking for, what you're thinking about in answering that question as we go through the next weeks?
Absolutely. So I'm going to give you the answer, and the answer here is going to be simply based upon the TAS market profiles. And the answer, so if I hear the question correctly, the question is not necessarily whether we've made a tradable top or not, but where does price need to close below to say that it's a tradable top of major significance? Is that correct?
Yes.
Perfect. That number is 4071 on the ES Mini. How do you like that? Now,
Good. Done. Thanks for your time, man.
Absolutely. Hey, look, I like to give you that masculine energy answer first, which is give you the answer, and then I can give you all the backstory out here. And so if we take a look at this chart that I have up on my screen, and I'm just going to take us back to the last major decline, which was back in the COVID 2019, 2020 level back in February. And the yellow lines that are on this screen, they represent the weekly bottoms of the TAS market profiles. And what we can see is once price closes below that, typically it's 2 weeks below that. It's really always 2 weeks below that, 2 bars below that. Then that's going to signal to you and I a significant change in trend and a move lower. Could even be one of a significant top and a move lower for a long period of time. That I don't really want to call at this stage here, but I do know, now that's a long way down from where we're trading. That's 310 points from where we're trading right now. So the first level that the ES Mini would need to close below to signal that potential move back to 4071 is 4301. And the question is, are we going to get that? And I don't know. What I do know is that if we take a look at the new profile that formed 2 days ago inside the ES Mini, and folks, that's the left-hand panel of the chart, this profile wrapped around the prior profile, meaning the high is higher than the prior high, the low is lower than the prior low. That is an indication of for you and I, John, to anticipate a consolidation market. Now, as we look at these charts here, we see that the YM, the Dow, and the Russell 2000, the RTY, those are in their typical consolidation patterns that we would explore. This one is different when we take a look at the TAS market profiles. And it was the ES Mini, the NQ, and the YM. So what they're really signaling to you and I is to expect a very jumpy market out here. And really, I think, John, the signal here that I'm seeing is really a trader's paradise for you. Specifically, because regardless of answering that larger question, this is providing in the tools that you use to trade both tops and bottoms. This is saying that you should have a field day, at least as long as this pattern remains. But the key answer to your question, the first level that would need to fail would be 4301, and that goes back to the bottom of the current new daily profile. And then if that were to take case, then that could signal a move back to 4701. And we can see by just simply even as we came off of the lows back in 2020, in March 2020, we've seen several tests of the bottom of those weekly profiles. And only once did we see a close below it, John. That was the week that began May 12th, and the very following week, price got back above it, and it was off to the races again. So does that answer your question, clearly as far as what I would be looking at?
If I could, please,
Yeah.
2 follow-up questions. I'll make it real quick.
Yeah.
One is actually not a question, it's a statement. The chart that you are showing that I am seeing in Tiger TV right now,
Yes.
with It is a chart I don't recall seeing. You probably showed it, and I just haven't paid attention.
Oh, that's okay. That's okay.
But that is a lovely thing. That is showing us, if I'm not mistaken, the yellow bars are the bottom of the weekly TAS profiles.
Correct.
And each new yellow bar is a new profile that's formed with its bottom shown in. And if I'm not mistaken, the
Correct.
blue bars that I see are the bottoms of the daily profiles. Is that correct?
That is correct. Because what you and I are really trying to answer here is, hey, where's key level of support that's got to break to give us a signal?
That is just amazing to see the S&P with the weekly profile bottoms since, April of 2020.
Yeah.
To see how, once the market's got in gear, it's come back multiple times to test those profile bottoms on the weekly charts, held.
Hey, John, we're just going to a hard break.
And there you go.
Yeah. Folks, we'll be right back.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Welcome back, folks. We're recording the show today early it's right now 8:30. If you're listening at 1:30, thanks so much for doing that. I know that last segment, and John, thanks so much for the call, is absolutely helpful to you, especially for the longer term trader out there to try to and I'm a very logical, I think those people listening might think I'm not logical. I think, so that's how I'll preface it. I think I'm a logical guy. First, I'm a guy. So we tend to be more logical. I'm a real, in other words, I think, is it the right right brain that is the logic side. The left brain is the creative side. So I don't have a left brain, just a right brain out there. And so it means I'm a very factual person. And so I like to identify tools here that are going to assist you and I. Do they fail at times? Of course. But here it's very clear in being able to answer John's question. It's not my opinion. It's just simply factual patterns that we can go take a look at out here. And really, that's what I like. And John asked a follow-up question, which was, what is it that we would need to see in the spot volatility index, in essence, to confirm that we really do have some type of longer-term change in trend? And so he's asking for a little bit more of the secret sauce. And so that answer, just like we took a look at the weekly here, John, that was a little bit of the clue, so to speak. It would be on the weekly chart for the spot volatility index. Now, those of you that listen know that I use the 50-day exponential moving average. This was from a bunch of back testing that I had done. And what I found was that when the spot volatility index was trading above the 50-day exponential moving average, the S&P moved sideways to lower. And when it traded, but now generally speaking, I'm not talking about when it's making a top or making a bottom. I'm talking the hamburger. I'm talking the big steak in the middle of the move. And when the spot volatility is trading below its 50-day exponential moving average, it's sideways to higher for the S&P 500. I can show you a table or a chart that shows that. You can go do the work yourself. Well, John, it turns out that if we see price closing above the 50-day weekly, so it's really not 50 days, right? It would be 250 days in essence out there, 50 times 5. But it's the 50-period exponential moving average for the spot volatility index. Now, this chart here doesn't show the S&P 500 on top or the bottom, so you can see those declines. But right now, that level is 2081. It's a exponential moving average. That level is going to change, but that would be the level that if price began trading above, it says, really look out below. So it's the weekly on the S&P or in the ES Mini for its profiles. It would be the weekly in the spot volatility index that you would be looking at to try to answer that question. Now, let me do this. There's one question that has come in so far. Or a second, there's two. So one's in the den, one's by email. Let's try to answer the den question first. This is Peak G. And Peak says, I speculate buying silver, gold equities, best risk reward now. Are you wrong? So to answer that question, what we need to do is let's go take a look at gold. So give me a moment to get to a gold chart or a set of gold charts out here. Yeah, let me get to the set of gold charts first. So here, what we're looking at. So look, people are actively trading the August contract. People are trading the October contract. But December is the one that is where prices is flipping over to. So I'm just going to expand out to the December contract for you to answer your question, Peak. And it's not me that's going to answer the question. It's going to be the charts that answer the question. And in taking a look at this chart here, what is the price level on the December contract that gold must close above to suggest that there is some kind of breakout? In other words, you're asking the question, is now the right time to buy those equities? Now, the reason we're looking at gold, folks, is because if I were to put up my directional chart, my correlation chart for gold and the miners out there, you'd see that it is so tied together, directionally speaking, not percentage moves or anything along those lines. By the way, from a percentage move standpoint, this is well known out there, and that is that in real rallies in the mining equities, it will outperform gold. So if you're asking which of the two do you want to be long when there's a significant bottom in there, well, it's really answered. Go back, take a look at it. And the outperformance is typically 3 to 5. It's either 3 to 1, between 3 to 1 and 5 to 1. So it's a significant benefit by being in those mining equities. But what we do know is the top of we know the swing point for December peak is 1839. We also know that price is trading inside a bullish structured daily profile for December. And the top of that profile is 1839. So I'm hesitant to answer your question yes, because then I would be telling you to buy into those mining equities when gold hasn't proven itself to be able to take out resistance. You kind of see what I'm saying there? Now, maybe you do, maybe you don't. So if price were to pull back, then I think that would really set up the entry into the mining area out there. So, it could be because is price getting ready to just take out the 1839 level? It very well may be. But from what you put in there was really the key words were risk reward. And so it's very difficult. I know it's tempting, but it's very difficult to ask anybody to buy a market that's right at resistance. And now, look, if we were to focus right now on only the August contract, I would have had an essence of a slightly different message to you. Yes, price still needs to take out its swing point. That's 1835, but it's above its profile levels. So it's in a little bit of a murky water. What really needs to be done, Pete, in essence, would be to go to the short time frame charts. And folks, these are charts that subscribers get each morning. And also in the evenings out there, and they're very helpful. I'm going to switch panels for us here, Pete. So give me a moment to do that. And then we're going to bring up our 8-panel multi-time frame set of charts out here. And as we take a look, so here's the other issue, and that is if we take a look at the 5-hour chart. Now, the 5-hour chart does not have a topping pattern. What it does have is it shows that price also hit a key resistance level. In this case here, this is the December contract now that we're looking at, 1835.70. See how price got right up there and it's backed off? Now, this is not bearish. Price hit resistance, and it hasn't gotten back to any support level. So, Pete, I know you are at your screens during the day. If gold could pull back and test this green oscillator and change line, see how it also changed colors here? When it changes colors, there's a phenomena associated with that. That's another cool thing about the oscillator and change line. There's many cool things about it, but this is one of those. Very subtle out here. We typically see price and that line catch up to each other. Now, we don't know how that occurs. It could be price moving down. It could be the line, price moving sideways, the line moving higher. It's a mathematical calculation. What I do know is when price hits that line, if it can test it and reject it, peak, a line that went from red to green, then you get that test and you bounce off it, that would be your bullish signal. So if you're really trying to time it, right now I'd have to say if price can get back on the December contract to 1824 and hold, then that would be an entry area or a place to begin the position. If price failed there, then we'd be looking at 1816. And if price failed below 1816, I'd say we'd be wrong then, directionally speaking. So I didn't go to the minors because I think it's more evident to be paying attention to gold right now to answer that question. And so, hey, as Gus in my big fat Greek wedding would say, there you go. Ruby, we'll take a look at the Russell 2000, but first I want to go to Hector, who wrote in. And Hector is asking about Amazon. Is this another great buying opportunity? So we take a look at Amazon. Let's switch over and see what Amazon is doing in the pre-market out here, and then we'll go take a look at the chart. So Amazon right now, it closed last night at $35.99. It's trading down $200, $33.40. So what we need to do here, Hector, is go figure out where the support inside of Amazon. If you remember right now in the pre-market, it's trading around $33.50. $33.50 takes us right now to the bottom of its weekly profile, which is 33.52, and it may be a buying. Right?
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So we're taking a look at Amazon for Hector and the fuel injectors. And in essence, Hector's asking, with this move, it's about $200 lower in the pre-market. Amazon's trading around $33.50. And his question is this a buying opportunity? Now, as we take a look at the daily time frame chart, 33.50 takes us down to basically the 1 to 1.272 A to B equals CD pattern out there. So, Hector, when there's an A to B equals CD pattern, Stevie likes those to be confirmed with some type of bullish reversal candle. No idea whether we're going to get that today or not, but if we don't, then that would suggest that, and especially if price were to close below 33.52. Here, let me just pull the Amazon. Let's take the weekly chart and expand it out here. Does this help us? Rarely has Amazon closed below the bottom of its weekly profile, but when it has, for example, back in October of 2018, that certainly led to a further decline. When it closed below it again back in July of 2019, that led to a move lower and a little bit of a consolidation out there. So, we need to respect the bottom, and it needs to be 2 consecutive weeks below that. So it's really 33.52 is level to be watching. Would I step in and buy it at the open or something? I wouldn't out here. If that's what you were asking, but does it have the potential? It does. And what you'd really need to see is the earliest signal that you would have, and we can't do anything until the market opens, would be looking at patterns for the short-term time frame. Here's a 30-minute time frame inside of Amazon, and we can see that yesterday at the close, it generated a Rhodes Momentum Indicator bottom signal with a bull sash candle. But that is clearly going to fail out here. You're looking for something like this, not something that's going to fail, but you're looking for some type of bottom signal on the short-term time frame with that weekly profile holding to then say, okay, you've got the cojones to go ahead and take that trade. But in essence, that's what you'd be looking for. And for Amazon, Hector, I would be looking at a 15, a 30, and a 65-minute chart out there. The reason for the 65 versus a 60 is because we've got 6.5 hours of trading or 390 minutes. So you want to have an equally time-framed bar. And 60 minutes just don't cut it, but 65 does. So that's what I would be looking at to try to figure that out. So is there potential? Yes, because of the bottom of that weekly profile, but that is the reasoning. We don't like wide-ranging bars to the downside. Of course, we don't know what today's bar is really going to look like. So thanks so much for writing in and asking and being up early. You said the early bird. A couple of granddaughters jumped in bed early, I believe it was yesterday morning, and we said the same thing to them. They were going to catch the early bird caught the early worm, and we had to really explain what the heck that meant out there. In any event, we've got a question inside the Tiger's Den from Ruby. Ruby wants to take a look at the Russell 2000. So let's go do that out here. And then the Russell 2000, Ruby, what you've got right now in the equity future contract still has that bullish daily profile. And so long as price can hold and stay above, that's really what I mean, 21.55, it should target 22.83. What could get in the way? Well, look, the ES Mini did not take out its high yesterday, and it's in that consolidation pattern out here. So that could be a problem. What else could get in the way of it moving higher? Look, the spot volatility is right now trading above its 50-day exponential moving average. So that could be a problem. Now, I know you wanted to look at it from perhaps multiple standpoints. So I'm going to switch over to our 8-panel chart here, and we're going to change screens because we want to understand what's going on from an intraday standpoint as well, because Ruby is more of a shorter-term trader, I believe. And as we take a look at the Russell 2000, it's actually just generated a bit of a bullish message, and maybe there's an A to B equals CD to the upside. So why does Stevie say that? Well, first, we can see at about 2:30 this morning, 1:30 this morning, it triggered a Rhodes momentum indicator signal. You didn't actually get the bullish reversal candle until 8:30. So just about 16 minutes ago when it formed that little bull sash candle. And then what proceeded afterwards, or the current session that we're in, Ruby, is prices once again up above the top of its profile. Now, this is a bearish structured 30-minute profile. Price closed above it at 4:30 this morning and then remained above it for about an hour. When a retracement back into a bearish structured profile is just a counter trend move where price finds support is the center line. Now, what we look at here is truly the body of the candle. The body of the candle is truly the essence of price. The wicks or the shadows, the upper lower, those are nothing more than the screaming memes out there. You know, that's what transpired during the session, but doesn't tell us where price opened and where price closed. And that's what we really need to know. So here, the signal that you're getting is that this remains bullish on a level of 0 to 10. I'd give it like about a 6 to 7 at this, maybe 8 at this stage here. But price needs to take out that shooting star. So it wants to make that attempt out here. At least that's the signal to you and I, and that's at 22.34.10. And if price did go ahead and get above that, then you're looking at A to B equals CD to the upside. That's coming to you courtesy of the 30-minute time frame chart. As we look at other charts out here, the 240 as an example, the 240 forms a TD9 count top. It does on the bar following bar number 9. And prices pulled back. It actually pulled back below support, that oscillator and change line, and the bottom of its profile. So it really depends upon the time frame out here. So the 240 is saying, I'm not so sure. And the 240 is also saying, hey, I need to close above 22.35 to change that tune. This is a bullish structured profile. So for this time frame, price closed below it. And counter trend rallies here would end at 22.35. So 22.35 is going to be a really key number, I believe. Was 22.35 also that high? Yeah, 22.34.10. So you know what you know the numbers, and now it's a matter of waiting to see how things play out. So Ruby, I hope that helps you out with regard to the Russell 2000. JB of the Tigers Den would like to do the same thing here for the Dow. And so we'll do that for you. In fact, maybe we'll do, JB, is spend a little bit of time on the Dow. But first, I'll give you kind of that short-term take, because I don't know what your time frame is on the Dow. But if we take a look at the Dow Equity Future Contract, well, first, let me point out a few things. One, if we look at the monthly chart out here, there is no topping pattern. There is no topping signal. None, zero, zilch. Are we likely at a significant top? That goes back to our first question from John. I believe the answer to that is no. If I take a look at the weekly time frame chart, the weekly time frame chart here does not have a topping pattern in place right now, nor does the daily. So that says, look, if the Dow Equity Future Contract can close above the top of its daily profile, and that is at 35.072, and that is a bearish structured profile, then, JB, there's nothing stronger, there's nothing more bullish than a failed bearish pattern. So the Dow won't prove itself again to you and I until it closes above 35.072. And we can be that specific. Now, what's going on a short-term basis out here? The short-term, if we just simply take a look at the 30-minute time frame chart, it formed its bottom, and it did it with a bullish reversal signal earlier this morning. It did it right at when did it do that? The first one that it generated was at 2:30 this morning, and it just continued to follow up with bullish reversal candles. One at 4 o'clock again. Price here, this is a bearish structured profile. Price pulled back, tested that oscillator and change line. It's got to clear this swing point, by the way. It has to clear 34.932 to suggest some type of quasi A to B equals CD to the upside. See the retracement back here, JB? came so far back to the bottom where the A point would be. Yeah, technically it's an A to B equals CD, but it's by a smidgen. So watch the Russell, watch the NQ out there, and when we come back, we'll take a look at U.S. Steel for SNP in the Tigers Den. Steve Rhodes with TFNN. Be right back.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tigers Den Trading Room only at TFNN.com. The Tigers Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in a trading world. Subscribers to the Tigers Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tigers Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Welcome back, folks. Thanks so much for joining us early out here. If you are listening in, this show is being recorded between 8 and 9, and hopefully we've made it pertinent enough for you to assist you with your trading, listening in to the recorded show. The next question coming in from one of our Denners, SNP, is asking about U.S. Steel. And as we take a look at U.S. Steel here in relationship to its market profiles, everything looks hunky-dory. What I mean by that is yesterday was a close above the top of its daily profile, 2473. A second close today, S&P is a bullish message. Price is trading above and may close the week out above the top of its weekly profile. That's 25.19. And price is trading above the top of its monthly profile. So from a profile standpoint, everything looks hunky-dory. But we don't just stop there because we need to understand, is there any other resistance levels that price needs to clear in order to say, I want to go back to its recent highs out there. So we'll pull over my other set of tools out here. And we're going to immediately focus on, I'm going to move over to the weekly first. And on the weekly, what we can see, the weekly has a valid top. It's got a wave number 7. That's letter G. That's courtesy of Basil Chapman's toolbox, but this is not the Chapman wave. This has a Rhodes Momentum Indicator top, so there's 2 of them that we've got. And, now it was an A to B equals CD to downside that did complete with this nice piercing candle. So if that A to B equals CD, I can't draw it in here, was a significant bottom, and we have to assume S&P that it is, the next level that you're looking for a confirmation that price is going to run higher is a close above Stevie's oscillator and change on that green line. 26.11 is what you're looking at. Price of trade right now at about where it closed last night. So you'd like this now. If you don't get that today, does that mean it's going to turn down? It means it could. But with prices above the profiles, it's really more neutral to bullish than it is bearish out there. So that's the weekly. The reason to be concerned about the weekly is if you look at the monthly, it does have a valid TD9 count top. That suggests price could pull back to the 1779. So, folks, thanks so much for joining us here. The early morning session, always great to do that. Take a look at what's going on in the futures market. Have a fantastic Friday. Be safe out there, and we'll see you back here on Monday.